Okay. We share my screen. It's okay now, right? You can see
Yes,
the
please.
Okay. Okay. So the conceptual framework of general purpose financial report by the public sector entities. The conceptual framework for general purpose financial reporting by public sector entities. This is what the syllabus asks us to know. I see in the assessment, candidates may require to 1, describe and explain the framework for general purpose financial reporting by public sector entities. And these are the things that we need to know. We need to describe, explain, and apply the conceptual framework for general purpose financial reporting in the public sector entities. And we are to pay attention to some of the things that we are going to see. 1, the objectives and uses of general purpose financial reporting. The objectives and uses of general purpose financial reporting. What are the objectives? What are the uses of general purpose financial reporting? We have to know. Okay, we have to know. Then we move on to the qualitative characteristics. Qualitative characteristics of financial reporting in the public sector. The qualitative characteristics of financial reporting in the public sector. When we talk about the qualitative characteristics, we are talking about things that make financial reports very relevant and informative to users of the GPRFRS. So the things that makes it very qualified, the things that makes it look okay for decision making and accountability purposes. Then the next one we are going to look at is the characteristics of itself of the reporting entity. When you talk about reporting entity, what is it? And what are reporting entity? What are the characteristics? What makes a reporting entity? We are also going to look at those aspects. Then the next one is elements of the public sector financial statement. The elements of the public sector financial statement. The financial statement that we are preparing or we are going to prepare, what are the elements that we see on the face of that financial? We need to know all the elements. Then the next one is the recognition criteria. How do you recognize an asset? How do you recognize liabilities and other stuff? So we are going to look at the recognition of items on the face of the financials. Then the last one we are going to look under this section is measurement of assets and liabilities presentation. Measurement of assets and liabilities presentations. So in all, this is what the syllabus asks us to do. Okay, the syllabus asks us to know all this. So this is what I want to expose you to. Okay, this is what I want to expose you to. We said that the conceptual framework for general purpose financial reporting by public sector entities, it carries 15 marks. So 15 marks is what we are going to look at today. Okay, 15 marks is what we are going to look at today. It carries 15 marks. So you need to know what I have just exposed you to so that you'll be abreast. When they ask you a question, you won't find yourself wanting in the exams hall. So please, let's try as much as possible to stay glued to our phones. Okay. Okay, Samsung SM. Samsung SM. Please, you're welcome. Samsung SM. Please, you're welcome. Can you hear me, please? Samsung, can you hear me? Okay, so let's go. So the conceptual framework carries 15 marks. And this is what I want you to know per the syllabus. This is what I want you to know per the syllabus. The introduction. We are saying that the development of IPSAS. What is IPSAS? International Public Sector Accounting Standard. International Public Sector Accounting Standard was initiated as a response to a growing need for quality financial information that are published by many government entities, which in the past had been considered very reliable and at times even subservient to the success of factors of government objectives. It was very important to improve the financial management and reporting practices of government agencies in order to deal with the deficiencies of economic decisions, in order to make and create an atmosphere of financial discipline, transparency, and corruption-free behavior. What is this one means is that we are saying that the conceptual framework is just there to guide the preparation of the general purpose financial reporting. When we are preparing the financial statement, this conceptual framework is just there to guide us. Okay, so it's been adopted by this standard. Okay, it's been adopted by this standard to look at all these things so that we'll have a good atmosphere of financial discipline, transparency, and corruption-free behavior in the public sector. Then we move on. Benefit of implementing accrual basis of IPSAS. Benefit of implementing accrual base of IPSAS. What are the benefits for the inception of the accrual base IPSAS? Okay, what are the things that we benefit from it? We are saying that the objective for the implementation of accrual IPSAS has been because it offers the following merit. One, the accrual accounting provides information which enable users to access the true and fair view of performance, financial position, and cash flow of government. So the accrual-based IPSAS, the accrual-based IPSAS give us a lot of information when we are preparing the financial statement. So we are seeing that when the introduction of the accrual-based IPSAS came, it provides us with much details or much information, which has enabled we, the users, to gain what true and fair view of what the financial performance that we prepare, the financial state position that we prepare, and even the cash flow of what government. Again, it also provides information which demonstrates accountability for use of all resources and management of all assets and liabilities. That shows how government financing its activities and meet its liabilities and commitment. So we are saying that with the inception of the accrual-based IPSAS, it has given us much in-depth knowledge that will ask for what? Accountability for the players of the public sector, those that we give our finances to. How are they managing all the finances, the assets and liabilities, the loans that they take, the financial assets that they take? How are they demonstrating accountability towards this particular thing? So we are saying that the accrual-based IPSAS upon the implementation has given us more knowledge, which demonstrates accountability. It has asked them to account for all their stewardship, okay, that meet its liabilities and commitment. The next one is accrual accounting requires government to maintain complete records of assets and liabilities, which are necessary for effective management of assets and liabilities. Remember, when we were doing the basis of accounting and we go to the accrual-based accrual accounting policies, we were saying that because the accrual-based accounting policy provides us with much information. An example I could give is that we are saying that revenue is earned, is recognized when it's being what? Earned. And expenditure is what? Is being recognized when it's being what? Incurred. So generally, it will tell you that it provides much information, okay, that will give availability of records on liability that will help government maintain a sustainable debt level and avoid sovereign debt crisis that hit a number of countries in these recent times. The next one also goes to the recognition of all costs, including depreciation and amortization, that ensures operating costs are complete and more reliable, measure therefore ensuring government performance in service delivery is more accurately measured and assessed. We are saying that the accrual-based IPSAS, because it takes account what depreciation and amortization, it ensures that there is what operating costs that are very complete and more reliably measured. Okay, that will ensure that government performance in service delivery is what is more accurately measured and assessed. The next point we are going to look at is IPSAS facilitate the availability of quality information that should ensure quality decision towards improved public service delivery, which is the reason why government exists. The next point is accrual-based IPSAS represents international best practice in public sector and not-for-profit organizations. This should lead to quality reporting by entities to reflect that the true and fair view of how public funds have been managed in our country. Okay, you know, the IPSAS is an international public accounting standard. And so doing, when we adopt the IPSAS, anything that we do, it is as an international base. Okay, it is an international base. And mind you, public sector is not for profit making. It's just there to render services to we the citizens. The next one is transitioning to IPSAS will lead to better national comparability and consistency of financial information within government and better international comparability and consistency of financial information, which other government is an essential ingredient of continuous improvement. So upon implementing the accrual-based IPSAS, remember, we are saying that the IPSAS is what? International public sector. So anything that we do in Ghana, it can enhance comparability between the nationals that will ensure consistency in the preparation of financial report. Okay, that will better the international comparability and what? Consistency of financial information. The next one is improve financial report through IPSAS adoption by government of Ghana that enhance transparency and accountability, which are fundamental principles of democracy and political stability. We move on to the conceptual framework, role and authority. What are the role and authority of the conceptual framework? What are the role and authority of the conceptual framework? Let's first of all look at the role of the conceptual framework. Let us look at the role of the conceptual framework. We are saying that the conceptual framework for general purpose financial reporting by public sector entities establish the concept that underpin general purpose financial reporting. That is the financial reporting by public sector entities that have been what? Adopted by the accrual-based IPSAS. So all this means is that the role of the conceptual framework is just there, okay? It's just there to guide the preparation of the general purpose financial report preparation, okay? It's just there to guide the preparation. That is why we are saying that it establishes the concept that underpin the general purpose financial reporting by public sector entities that adopt the accrual basis of IPSAS. So therefore, if a country adopts the accrual-based IPSAS or the accrual base of accounting, therefore we are going to use the conceptual framework to guide its preparation, not just there to supersede the IPSAS, but it's just there to guide the preparation of the general purpose financial reporting. So we are saying that the IPSAS board, which is the International Public Sector Accounting Standard Board, apply this concept to develop the IPSAS and recommended practice guidelines, which is the RPG, that are applicable to the preparation and presentation of general purpose financial report of public sector entities. So the IPSAS board, just so they apply this, okay, they apply this just to guide, and just what? To develop the IPSAS and what? The recommended practice guide that are applicable when we are doing the preparation and what? And presentation of the financial report by public sector entities. Then we move on to the authority of the conceptual framework. The authority of the conceptual framework. What are the authorities of the conceptual framework? Does the conceptual framework have authority over the IPSAS? Let's look at what it says. So we are saying that the conceptual framework does not establish authoritative requirement. So the word here that we need to remember is this. The word here we need to remember is this. We are saying that it does not establish authoritative requirement for financial reporting by public sector entities that adopt the IPSAS, nor does it override the requirement of IPSAS and RPG. What is RPG? Recommended Practice Guidelines. So we are saying that the authoritative requirements relating to the recognition and measurement and presentation of transactions and the events that are reported in the general purpose financial report that are specified in what? In the IPSAS. So in so doing, the conceptual framework does not have any authoritative what? Guideline when we are preparing the financial statement. So when an auditor comes to an entity to audit and you don't go according to the conceptual framework, he or she don't have anything to say that you have breached the law, because the conceptual framework is just there, okay? It's just there, just to guide the preparation, and it does not have any authoritative requirement for financial reporting by public sector entities that adopt the IPSAS, nor does it override the requirements of the IPSAS and the recommended practice guide. Remember, the IPSAS and recommended practice guide has a requirement. And what are the requirements that we are talking about? It relates to the recognition, the measurement and presentation of transactions, and the events that are reported in the general purpose financial report. So we say that the conceptual framework can provide guidance in dealing with financial reporting issues that are not dealt with by the IPSAS and the recommended practice guide. In this instance, the preparers, those who prepare the financial reporting, and others can refer to and consider the applicability of definitions, recognition criteria, the measurement principles, and other concepts that are identified in the conceptual framework. So what this simply means is that the conceptual framework is just there, just to give you guidance, okay? Acquired to say, in the frenia or puma. So the puma, okay, the puma just guide the person to work, okay? It just guide the person to work. So the conceptual framework is just there as what? As the puma, okay? As the stick that guides the blind person to work. So it guides in the dealing with what? Financial reporting issues that has not been dealt with what? With the IPSAS and recommended practice guide. So when you are preparing the financial report and you realize that there are certain things that the IPSAS is silent about, the recommended practice guide is silent about, therefore you need to refer to the conceptual framework to help you to prepare the financial statement that will help users to take decisions and enforce accountability. And what are the things that we are going to look at? We are saying that it considers the applicability of definitions. The definitions, we look at some of the definitions of the elements of what? The financial statement. How it's been what? Recognized, the recognition criteria, the measurement principles. How are we going to measure? How are we going to measure it? And other concepts that have been what? Identified in the conceptual framework. Please, at this point, any questions so far? At this point, any questions so far?
There's no question on my part for now.
Thank you. Any other colleague? Any questions so far? Okay.
No, not from me.
Okay, thank you. If there's no question, let's continue. So let's be mindful. There have been questions that ask, What are the roles and authority of the conceptual framework? So mind you, these are the areas that we are going to use to explain. You just tell the examiner that the role of the conceptual framework, okay, establishes what? The concept that underpin the general purpose financial reporting by public sector entities that adopt the accrual base of accounting. Okay, so the authority, we are saying that the conceptual framework does not have any authoritative guideline or authoritative requirement when we are doing the preparation of what financial statement. So let's be mindful. Okay, the conceptual framework does not override. Okay, it does not override the requirement of what the IFSAs and the recommended practice guide. It just give what the guidelines when we are preparing the financial reporting on issues that has not been dealt with the IFSAs and the recommended practice guide. So we said that in some instances, those who are preparing the financial statement and other users, okay, they consider the applicability of the definition, the recognition criteria, measurement principles, and other concepts that have been identified in the conceptual framework. We move on to the objectives of financial reporting in public sector. What are the objectives? There have been questions that ask, what are the objectives of the financial reporting in public sector? Okay, what are the objectives? The financial reporting that we prepare, what are the objectives of it? Why do we prepare the financial reporting? This is what we are going to look at it. Okay, so we are saying that the objective of the financial reporting by public sector entities are to provide useful information about the entity, the users of the general purpose financial report. When we talk about GPFR, we are simply talking about the general purpose financial report for accountability purpose and decision-making purposes. Please and please and please, we a key, a money print talk, a udan anu key. Don't let these statements that I have just said, don't let this statement that I have just said be taken away from you. Always remember this, that the objective of the financial reporting by a public sector entity are to provide useful information about the entities to users of the general purpose financial report for accountability sake and decision-making what purposes. So please and please, I repeat, mawe enye usafwa, the money in free talk, let it be the key you are holding. Don't let it fall. Okay, I am saying that the objective of the financial reporting is to provide useful information for the users to demonstrate, to ask for what accountability, and use those what information that they have in their financial report to make decision for themselves. Then the financial reporting is not an end in itself, but its purpose is to provide information that are useful to users of the general purpose financial report. What are the users? What are the users? What are the users of the general purpose financial reporting? What are the users? We are saying that users of financial report and their information needs. What are the users of the financial report and their information requirement that they need? Okay, we are saying that the syllabus is saying that we have two main types of users of general purpose financial reporting, and they have been categorized into primary users and other users. Primary users and other users. Please, let's not forget. Let's not forget. We have two main users. We have the primary users and other users. The primary users and other users. Who are the primary users, or what are the primary users? We are saying that the primary users are the service recipients. The service recipients and resource providers. But let's be mindful that not all citizens are resource providers. Who can answer this question? Not all citizens are resource providers. Who can help us understand this statement? the statements I have just highlighted. Who can help us to understand this particular statement, please? Anybody who can help us to understand this? Colleagues, are we there? Who can help?
Yes, please.
Not all citizens are resource providers. Just try.
Okay.
Try.
Okay. So let me try.
Okay.
So if you are talking about not all citizens are resources, it means that there are some that, for instance, we have those that we have taxpayers, we pay taxes. There are some who do not pay tax. So those that are out, let's say they decide to either evade or deliberate not to pay, they will not be part of those who are resource providers. I don't know whether I've qualified.
Okay. Thank you so much. Any other view? Colleagues, any other view? Let's bring out something. Any other view? My brother, thank you for your information and the contribution. Any other view? Colleagues, any other view? Okay. So when you say not all citizens are resource providers, let's first of all understand the resource providers. My brother, you are right. Okay, you are perfectly right. Resource providers are the people who provide what? Resources to the government. And what are the resources? They pay taxes to what? To government. Okay, they pay what? Taxes to what? To government. So they provide what? Monies to what? To the government. And mind you, we have citizens as general, but let's be mindful that not all the citizens in Ghana pay taxes. Not all the citizens in Ghana pay taxes. So therefore, the statement, not all citizens are resource providers, is saying that not all citizens in Ghana pay taxes. So those who don't what? Pay taxes or provide resources to government is what we are referring to here. Okay, so we have what? Primary users. And the primary users, we are saying that they are what? The service recipients and what? Resource providers. Service recipients and resource providers. Who, when we talk about service recipients, we are the people that, the service recipients are the people Mr. Vincent, you are welcome back. Can you hear me again? Okay, service recipients are the people that will receive what? The services that government what? Provide to we the citizens in the country. Okay, so that is what we are saying, that primary users are the service recipients and resource providers. Okay, so what are the primary users? We have one, citizens, the citizens of the country. Two, taxpayers. We have divided this into two simply because not all citizens are taxpayers, and not all taxpayers are what? Are citizens. Okay, so let's be mindful of this. Not all citizens are taxpayers, and not all taxpayers are what? Are citizens. Okay, then the third one is parliament. The parliament. Those are what? The MP, the representative of what? The constituency. The multilateral or bilateral what? Donors, the lenders and creditors. These people forms the primary users. These 5 people forms the primary users. They are the citizens, the taxpayers, the parliament, the multilateral or bilateral donors, the lenders and creditors. The lenders and creditors. So we move on to other users. Other users. Other users. What are the other users? The other users refer to the media, the budget analyst, audit institution, government statistician, the researcher, the investor, government revenue agency, example like the GRA, employee or trade unions. Employees or trade unions. So these people are what are the other users, and what are the information needs? When you talk about the media need the financial statement information in order to access government and to provide the citizens on government what activities that they provide with the citizens. Budget analysis. The budget analyst also need the financial information in order to what? To aid him prepare his budget for usefulness of what? The entity. The audit institution also need a financial statement in order to audit, to express his opinions on what? The financials. Then the government statistician also needs financial information in order to what? To give us what? The statistics of what? The government, the country in terms of what? The inflations and other stuff. The researcher also needs the financial information in order to aid him what? To do his research work. Investor. The investor needs the financial report information in order to know whether to plan and invest in the country or not to invest in the country. What will influence him to invest? It depends on the information needs on what? On the financial statement. The government revenue agency, like the GRA also need the financial the information on the face of the financials in order to what? To know how he's going to plan to execute his mission to collect what? Taxes for what? For government. The employee or trade unions, they also need the financial information in order to assess the government, on the services that they are providing, as to whether the policies that they have provided to they have promised what to the citizens they are making as to what they have just said. Then the primary users, the citizen, the taxpayers, the parliament. Let's talk about the taxpayer. The taxpayer needs financial information in order to know whether the taxes he or she is paying, government is using it judiciously and as intended purposes. Whether it is using it to bring development to the communities or not. Is government using the tax monies very judiciously or not? This is what the taxpayer also needs. The parliament also needs the financial information, to deliberate and also approve budgetary to the people of Ghana, and also to report to the communities in which they are represented. The multilateral and bilateral donors, they also need financial information as to whether the monies that they have donated to the country are being used judiciously. Lenders and creditors. When you talk about lenders and creditors, you want to know the solvency and the liquidity of the country, so that when you apply for loans, you'll be able to assist without hesitation. So these are the information needs of the users of the financial statement. We move on to the information needs of primary users. Information needs of primary users. And I said earlier, when you talk about primary users, they are They are the service recipients and resource providers. They are the service recipients and resource providers. So for accountability and decision-making purposes, service recipients and resource providers, that is the primary users, need information that supports the assessment of such matters that we are going to discuss below. One, to be able to assess the performance of the entity during the reporting time. They need the financial information in order to assess the performance of government or the performance of the entity, as to whether the entity is performing or the government is performing during the period to which it has been assigned to. So for example, we are saying that meeting its service delivery and other operating and financial objectives. Is government meeting its service delivery? The services that he has to provide to the citizens, is he meeting those services that he said he is going to provide, and other operating and financial objectives? Then three, managing the resources is it's responsible for. What are the resources? The resources are the tax monies that we have entrusted into the hands of what? The government or the entity. Are they managing it well? The assets and liabilities, are they managing them well? So the users of the financial statement need what? This financial statement in order to what? To know whether government is managing the resources that has been what? Be entrusted into the hands. Then the last one under the performance of the entity is that complying with relevant budgetary, legislative, and other authority regulating the raising and what? And the uses of what? Resources. So is government complying with the budgetary requirement? Is government working within the government that has been what? Approved? And the legislative, okay, the laws governing what? The financials, is government what? Complying with all the legislative, that is what? The laws, the PFM Act, the PFM regulations, the GRA, the Tax Act, and other laws. Is government what? Complying with them. Then the second aspect of the information need is what? The liquidity. When you talk about the liquidity, is the ability of what? Government to meet its current obligations. The liquidity simply means what? The ability of what? Government to meet its current obligations. And solvency of what? Of the entity or the government or the country. So when we talk about solvency, we are saying that the ability to meet what? For government to meet its obligation over the longer period. Over the longer period. So the liquidity is what? Is the shorter period. That is what? The current obligation. But the solvency is what? Is to assess whether government is solvent enough to meet its obligation during what? The longer period or the longer term. And the third one we are going to look at is what? The capacity of the entity to adapt to changing circumstances. The capacity of the entity to adapt to changing circumstances, whether changes in demographics or changes in domestic or global economic conditions, which are likely to impact the nature or composition of the activities it was undertake and service provided. So this simply means that in the event where we have what? Changes in the domestic and global economic conditions. So example could be what? The COVID-19 time. Is government having what? The capacity in order to adapt to these changing circumstances? This is what the information, the users would need the information to know, okay? Or whether it will impact on the nature and or what, the composition of the activities, okay? So during the COVID-19 period, will government have what? The capacity to continue to provide what? The services that you do provide to the citizens before then. This is what the information that the primary users would need. And the last aspect is the sustainability of the entity service delivery. The sustainability of the entity service delivery and other operations over the long term, and the changes therein as what? A result of the activities of the entity during the reporting period. And that includes one, the capacity of what? The entity. The capacity of the entity to continue to fund its activities. The capacity of the entity to continue to fund its activities and to meet its operational objectives in the future. That is what? The financial capacity. So is government having what? The financial capacity in order to sustain him, to continue to what? To give services to what? To the citizen and other operations over what? The longer period. Okay. And the last one we are going to look under the sustainability is the physical and other resources that are currently available to support the provisions of services in future period. Mind you, all this that we are looking at is that government or the public sector is not in for profit making. So he's just there to provide what? The needs of what? The citizen. So providing what? Services. So is government having all this capacity to sustain him, to continue to provide these services to we the citizens or not? This is what we the citizens need the information to know the going for concern of what? The country. Then we have what information that are provided by what general purpose financial reporting in terms of the financial position, financial performance, and what and the cash flow. So we are saying that information about the financial position of a government or other public sector entities will enable users to identify the resources of the entity and claim to those resources at the reporting date. So this will provide information that are useful as input to assessment of such matters that are discussed below. 1, the extent to which management has discharged its responsibilities for safekeeping and managing the resources of the entity. The extent to which management has discharged its responsibility for safekeeping and managing the resources of the entity. 2, the extent to which resources are available to support future service delivery activities, and changes during the reporting period in the amount and composition of those resources and claims to those resources. And the last one also is what? Is the amount and timing of future cash flows that are necessary to service and repay existing claims to the entity's resources. So these are the information needs of what? The primary users. Any questions so far? Any questions so far?
No, please, for now, on my part.
Okay. Other colleagues, any questions so far?
No, not from me.
Okay. Okay. So when they ask you, what are the information needs of primary users? Please, let's be abreast with this. With this, okay? These are the images that we are going to use to answer the question. Later, I'll be exposing you to some of the questions that they ask regarding the conceptual framework. And you know how the conceptual framework works and how you are going to provide what the answers to the examiner. Okay.
Okay.
So we move on to the types of the financial report. Types of financial report. We have 2 types of financial report. We have the special purpose and general purpose financial report. We have the special purpose financial report and the general purpose financial report. When you talk about the special purpose financial report, we are saying that this is a financial report that is being prepared to respond to the requirements of users that have the authority to require the preparation of financial reports that disclose the information they need for their particular purposes. So with a special purpose financial report, we are saying that it is what? A report that is being what? Prepared to meet what? The requirement of users who have the right to request for what? For the preparation of the financial report that discloses what? The information that they need for their particular what? Purpose. When you talk about the particular purpose, for accountability and what? And decision-making purposes. Let's not forget the special purpose financial report is a report that is being what? Prepared for users who what? Who have the authority to request for the preparation of their report for their information needs. Okay, so this is what I want you to know. Let's not forget. And the general purpose financial report. The general purpose.
So can I ask the question here?
Yes, please. Please go ahead.
So can I ask you? So
Yes,
my
please.
question is, who are the users who have the authority to request for this particular report under the the special purpose?
Okay, thank you so much. The special purpose financial report, the users. So assuming that maybe you are a donor, okay? You have donated an amount to government what? To to construct maybe a toilet facility, okay, to construct a toilet facility, because you have given what? Government money, that is donation, you have the right to request for government to prepare financial report for you as to whether they have what? Implemented what you have asked them to do. So for instance, the IMF, okay, IMF, you have gone for loan from IMF, okay, IMF have the right to request for what? For financial report. Or maybe, let's take, for instance, these NGOs, okay, international NGOs. Can you mention some of them?
Yes, Mandafo Ghana Foundation.
So these people, for instance, has given government what? Money, has sponsored government, has donated some amount of money to government to run a program. So this program that they have asked government to run, it comes with conditions. So upon everything, they have the right to request government to prepare for a financial report for their information need. So whether whether like government, they will give government money the next time or not, whether government has implemented as what they have asked in the terms and conditions. Okay, so those are the special purpose financial report. Okay, please, is it well understood?
Yes, please.
Okay, so general purpose financial report. The general purpose financial report, we are saying that general purpose financial reports are a central component of a support and enhance transparent financial reporting by government and other public sector entities. So in so doing, we say that the general purpose financial reports are financial reports that are intended to meet the information needs of users who are unable to require the preparation of financial reports that is tailored to meet their specific information needs. So we are saying that the general purpose financial reports are reports that are being prepared for users who do not have the special right or the special requirement to request for the preparation of financial reports for their information need. Okay, so with this one, let me give you an example. Like Ghana, for instance, when Ken Ofori-Atta is preparing financial information, or the Controller and Accountant General is preparing financial information, he prepare it to meet the general needs of the citizens. Okay, he prepare it to meet the general needs of the general citizen. So you and I don't have the right to go and tell him that he should prepare a specific financial report for we. So he just prepared the financial report to meet the general needs of all the entire the citizens. Okay, so that is why we are saying that some of the users of the financial information may have the authority to require the preparation of the report that are tailored to meet their specific information needs, while such parties may find the information that are provided by the general purpose financial report that are useful for their purposes. Okay, so general purpose financial reports are not developed to meet specifically respond to their particular information needs. So that is what we term as this aspect. This aspect is what we term as the general purpose financial report. So it is being prepared to meet the needs of the general citizen that don't have the right to request for the preparation of a special a particular report for their information needs. So they just prepare it in a boxy way. So it's prepared in general, so that when you get it, it's fixed in for all the citizens. Okay, it fixed in for all the citizens. Please, I don't know if you are getting it, if it is okay, or I should go over.
Please, I'm okay with what you have said.
Yeah, it's okay, boss.
It's okay. So let's not forget the special purpose financial report is prepared for users who have the right to request for the preparation of financial report for their information need. While the general purpose financial report is it's a report that is prepared for users who don't have the special right to request for the preparation of the financial report for their information need. Okay, let's not forget. We move on to qualitative characteristics of the general purpose financial report. What are the qualitative characteristics? What makes financial statement or financial report very useful? Okay, what makes it very useful? That is what we are going to look at today. Now. Okay, we are saying that the qualitative characteristics of information that are included in the general purpose financial report are the attributes that make that information very useful to users and support the achievement of the objectives of financial reporting. And the objective of the financial reporting are to provide information that are useful for accountability and decision-making purposes. Please, I want to ask a question here. Let's see if you can answer. What, as an accountant, a citizen walks to you and asks you, can you tell me the reason behind the preparation of general purpose financial report? How can you answer this question to him or her?
Okay. So one, I mean, we prepare it for accountability, like I mean, we are learning, and also for decision making purposes. So accountability means, I mean, resources have been entrusted to us or less the managers who are supposed to account for it. So in the one key medium or that they use to inform or to depict the accountability through the financial statement. So you prepare it as a form of accountability so that the user will be able to know your dealings, your let's say your revenue you have and you use to generate, I mean, all the performance. And then also it will also aid that person once they have gotten that information, okay, to make, I mean, deduction, let's say decision from it, whether okay he's okay with what has been presented or not. So this is my little understanding.
Okay, thank you. So this is what I am expecting. Okay, what I've just bolded is what I'm expecting. The objective of financial reporting are to provide information that are very useful to users to discharge what accountability and decision-making purposes. So I have asked you again, please and please, this is a key to your door. This is a key to your door. And my name is top. Let it be in your pocket. Okay? Let it be in your pocket.
Okay.
So that when the question is asked, you will understand what it means. Okay? Thank you.
Okay.
So the qualitative characteristics of information that are included in the general purpose financial report, public sector entities are: 1, relevance. 2, faithful representation. 3, understandability. 4, timeliness. 5, comparability. And the last one, which is what? 6, is verifiability. Please, on this note, I will entreat each and every one to take pen and paper. I have not explained this one on the slides, but I'm coming to explain to you. Kindly put down something so that when you are revising, you will be able to pull alongside with what you have written. Please, I hope it's clear and it's fair.
Yes, please.
Okay. So are we ready to go?
Yes, please. I'm ready.
Okay. So as I said, there are 6 qualitative characteristics of information that are included in the general purpose financial report of public sector entities. And they are namely the relevance. So when you talk about relevance, what do we mean by relevance? We are saying that financial and non-financial information, financial and non-financial information is relevant if it is capable of making differences. If it is capable of making differences in achieving the objective of the financial reporting. Of achieving what? The objective of the financial reporting. And let's not forget that the financial and non-financial information is capable of what? Making differences when it is having what? A confirmatory value and predictive value, or both. So what I want you to know here is that the financial information under the relevance should contain two things or both. That is what? The confirmatory value and what? Predictive value, or both. So the financial statement that you are preparing or that has been prepared, we are saying that the finance should be, for it to be relevant, it should contain what? A confirmatory value and what? And predictive value. Confirmatory. Predictive value. Predictive value. Or both. Okay. Please, are we there? Is
Yes,
it okay?
please. Yes, please.
Okay. So we are saying that the financial report should be what? Capable of making differences. Okay. And the differences that we are seeing is that it should be able to achieve what? The objective of what? The financial report. And what are the objectives of what? The financial report? For accountability on what? Decision making. And for financial reports to do what? Should be relevant. We are saying that it should contain what? A confirmatory value. A confirmatory value in the sense that the figures on the financial should be able to be confirmed. You should be able to confirm the figures as to whether they are what? They are correct or wrong. The figures on it, you should be able to predict whether the financial statement in the next preparing what go well or will not go well. Or it should have what? Those two. That is the confirmatory value and predictive value. Please, is it okay? So I should go over.
Please, I'm okay.
Okay. So we are saying that, for instance, information will be what? Relevant for accountability and decision-making purposes. If it what? It confirms the expectations about such matters as the extent to which managers have what? Have discharged their responsibility for efficient and effective use of resources, the achievement of specified service delivery, objective, and compliance with relevant budgetary and legislative and other requirements. So let's not forget these two things that I've said. So for information to be relevant, it should contain what? A confirmatory value and what? A predictive value, or both. Let's move on to the faithful representation. Faithful representation. We are saying that for information, financial information to what? To be faithful represented. We are saying that useful in financial information must be what? Must be a faithful representation of economic and other phenomena. That is what it purported to represent. So the faithful representation is what is attained when the depiction of what the phenomenon is complete, natural, and free from material error. So in all, what we are going to say is that under the faithful representation, financial information should be what? Should be faithfully represented in the sense that it should what? It should be very complete. It should be not neutral and should be free from what? Material error. Okay, material error. So if financial statement suffers from all these things that I've just said, then we are saying that the financial information is not what? Faithfully represented. So for faithful representation in terms of what? The financial, we are saying that it should be very complete. The financial statement that you are preparing should be what? Should be complete. 2, it should be what? Neutral. 3, it should be what? Free from material error. There shouldn't be what? Material misstatement or material what? Understatement. Okay. Then the next one we are going to look at is what? The understandability. The understandability. Understandability. We are saying that the understandability is what? Is one of the quality of what? Information that enables what? Users to comprehend its meanings Okay, so the understandability will help the users to what? To complement or understand the meaning of what? The report. So the general purpose financial report by public sector entities should present information in a manner that responds to the needs and knowledge base of what? Of the users, and to the nature of what? The information that have been what? Presented. So in all, or in a summarized way, we are saying that the financial statement that are being prepared should have what? A relevant what? Explanation or explanatory and what? Appropriate disclosures. Okay, relevant what? Explanations. Appropriate disclosures. Please, are we clear? Is it okay?
Yes, please.
Okay.
Yes,
and here
please.
we are saying that it should what? Complete. Complete. Neutral. And what did I say? I'm free from what?
Free from material errors.
Material error. Thank you. What bang. Thank you. We are saying that it should what? Complete. The information should be complete, neutral, and free from what? Material error. That is what? Faithful representation. And the understandability, you have what? Relevant what? Explanations and appropriate what? Disclosures. When you remember, the financial statements that are being prepared, we support it with what? Notes. So the note is giving what? The explanation and disclosures of what? The financial statement. So that those notes will aid what? The understanding of what? The users. Okay. So we are saying that financial statement should be what? Understandable when it has what? The relevant what? Explanations and what? Appropriate disclosures. So in all, in a summarized way, the financial statement should have what? Additional information that will help users to comprehend or understand what? The financial statement that have been prepared for their information needs and what? Accountability. Please, is it okay or I should go over? Please, is it okay or I should go over?
Please, it is okay for me.
It's okay by
It's okay. It's okay.
Madam Franca, are you there?
Yeah, I said it's okay.
Huh?
I said it's okay.
Okay, thank you. How is it going? How is it going? Is it okay for me or?
Yes, please.
Thank you. Okay. The next one is what? Timeliness. Timeliness. So when it says timeliness, it means that having information available for users before it loses its capacity to be useful for accountability and decision-making purposes. Okay, having what? Information that are available for users before it loses its capacity to be what? Useful for what? Accountability and decision-making purposes. So we are saying that the financial statement should what? Should arrive as at the time the information is needed. Okay. Information. What? Should be available or arrive as at the time the information is needed for accountability and decision-making purposes. So we are saying that timeliness as one of the quality is that the information should be what? Available or arrive as at the time the information is needed for accountability and decision-making purposes. Let me refer you back to what the PFM Act. Okay, the PFM Act. Okay. The finance minister have the responsibility to present what to Parliament, not later than what 31st of July. Okay, 31st of July. For instance, maybe the finance minister did not present what the information to Parliament before the D-Day, but he presents the information today. Is the information useful to the users or is not useful to the users?
The law, I can conclude that it's not useful to the users.
Thank you. Then again, let me use another case. You are preparing the financial statement and you are using what you are preparing it for 2022. But you have what? You have brought 2020 financial statement attached to what? To the 2022 financial statement. Is the information you are providing useful to the users or not?
Please, it's not useful.
Oh, useful.
That means that it didn't come on time. Okay.
Yes, please.
So for you to compare for what? The timeliness, that means that you should bring what 2021 and 2022. Okay. So please,
yes,
let's
please.
be mindful. This is how they ask the question. They will either give you what a scenario or what is a financial statement. Then you analyze it and use the qualitative information, okay, to answer the question. So let's not forget. Okay, let's not forget. The next one is what? Comparability. 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 What do we mean by comparability? We are saying that comparability is the quality of information that enables users to identify similarities. Okay, that enables users to identify similarities and differences between two sets of what? Phenomena. Okay, two sets of what? Phenomena. So here we are looking at what? What are we looking at? What did I just say?
Identify comparability.
Identify comparability. Identify what? Similarities. Okay.
Similarities.
Similarities. Okay. In and what? And
differences between two sets of.
Okay. My colleagues, you. My between two what? Two sets of what?
Phenomena.
Phenomena. Oh. As I'm map I say we. A little push keke. Now we are good to go. So we are saying that information should what? Should be compared when it's what? It identifies what? Similarities in and what? Difference between two sets of what? Phenomena. So the comparability, we are saying that it should be able to what? To compare what? Two phenomena. The financial statement that you are preparing and providing and presenting should be able to identify similarities in and what? And differences between two sets of what? Phenomena. So again, I'll give example. Here, the second example I gave still holds, okay? So we are bringing what? Two sets of what? Financial statements so that it will aid the users to compare whether last year the financial statement was good or the performance of what government was good as compared to this current year, or whether this current year performance is what? Is good than what? The previous year, okay? So that we'll know the progress of what? The government, whether government is giving what? The best in terms of what? Service delivery. Please, are we clear? So here, for instance, when they prepare financial statement, okay? When they prepare financial statement, let's look at something here. They prepare financial statement and they bring what? 2021, okay? And they bring what? 2022, okay? So they are comparing these two. the 2021 financial statement and what 2022 financial statement as to whether to what to see the differences and what similarities in terms of what performance. Please, are we clear? So assuming
Yes.
that they have prepared what financial statement for you, and they have said that the financial statement is only for 2022. Is the financial statement comparable?
No, please.
It's not comparable. So these are some of the things that you need to know. So two sets of phenomena, we are saying that what 2021 and what 2022 financial what statement. So you are using the two to compare to see what the progress of what government over what the year. Please, I hope it's clear.
Yes, please.
Thank you. Then the last one is what? Verifiability. 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 We are saying that verifiability is what? Another one of what? Information that help assure users that information in what? The general purpose financial report are faithfully what? Represented the economic and other phenomena that it purports to represent. So we are saying that this simply implies that the difference in what? In the knowledge and what the independent observers could reach general conclusions or consensus, although not necessarily what complete agreement, that either one, the information represents the economic and other phenomena are what? Are for it purported and what represent without material or bias. Okay, so the verifiability, we are saying that the financial statement should what? Should be verified. Okay, should be verified. Okay, should be what? Verified. The financial statement should what? Should be verified. Okay, we should be able to what? Verify the information, the financial statement. Okay, so that we know whether it is very what? Faithful represented. It is what? Free from what? Material error, or what? The appropriate recognition and measurement or representation method has been what? Has been applied without material what? Or bias. Okay, verified without material errors or bias. Please, is it okay?
Yes,
Just
please.
now, we have just prepared our notes like that too. We've just prepared our notes. Okay. So the relevance, we are saying that the financial statement should have what? A confirmatory value and predictive value, or both. Okay. 2, the faithful representation. We are saying that it should what? It should be complete. The financial statement should be complete. It should be neutral and free from material error. Understandability, we are saying that the financial statement should have relevant explanations and appropriate disclosures. That is what? The additional information that supports the understanding of what? The financial statement by users of the general purpose financial report. And the timeliness, we are also saying that information should be available or arrive at the time the information is needed for accountability and what? Decision-making purposes. So here I gave you an example using what? The law, that is the PFM Act. 31st July, the finance minister has what? The right to present to parliament. So later than that, if you present beyond that, that means that the information are not useful. But when you present before that, it's still useful. Okay, let me cite an example here again. You know, we have 4 quarters. Okay, we have 4 quarters. And they ask you to present your financial information for the auditor. Okay, the auditor general to audit for the first quarter. But you didn't present the information within the first quarter, but you have presented it in the 3rd quarter. Is the information useful or not?
This is not useful.
It's not useful.
Not useful.
So the law is saying that
Yes.
you present what? The information within what? The 1st quarter. So please, let's take account into what? Let's take into account into all the examples I'm giving. Okay. Then the comparability. You are saying that it should what? The financial statement should identify what? Similarities in and what? And differences between 2 sets of what? Phenomena. That is what? Comparing what? 2 years. Okay. Comparing what? 2 financial statements, so that we know whether the financial statement we are making progress or not. And the last one is what? Verifiability. The financial statement should be verified without material errors or bias. You are not presenting the financial statement on a biased basis. You are preparing it to show the true and fair view of what the country. Please, any question here? You know, I took my time to explain all these things simply because I want you to get the understanding. Even when you go and you don't revise Quran, this one alone will aid you to understand better. So is it well understood, please, colleagues?
Yes, please.
Okay, sir. I want to ask a question. I want you to explain what this statement means.
Okay.
That the financial statement reflects the economic substance of transactions and not merely the legal form.
Please come again.
I'm asking that if you could explain what this statement means, that the financial statement should reflect the economic substance of transactions and not merely the legal form.
Okay. So thank you so much, my dear colleague. So we are saying that the financial statement, okay, you know, we have what? Financial audit, and we have what? The compliance audit. Okay. The compliance audit, as you just said, I'm using that one as an example so that you digest and know how you are going to do. The financial statement that you are preparing should show true and fair view. And as I gave you the example, we have what? The financial audit and what? The compliance audit. So the compliance audit is what? Is the law. Whether you are what? You are going according to the legislative, the law, whether you are complying with the law. By the financials, as we just said, we are saying that you are presenting the information in order to show the true and fair view, whether the transactions that you have incurred, the transaction that you have done within the period under the review should be reflecting what exactly is on the ground. Okay, what exactly is on the ground. So when you heard of what you hear of what compliance in terms of what the legislation, you are talking about what going according to the law. But when you talk about the financials, okay, that is where you are going into details about what the transactions that took place within what the period under review. Please, is it okay?
Thank you.
Is it okay?
Yeah, that's
well understood.
That's
I
okay.
should come over.
Well, for my side.
Your side is okay. Colleagues, what about you?
I'm okay.
This is okay.
Thank you. Then we move. So the next one is what the constraint included in the general purpose financial report. The constraints, the limitations included in what? In the general purpose financial report. We are saying that the constraint of accounting refers to the limitations to providing financial information. So financial reporting must follow generally accepted accounting principles, or the GAAP, okay, or the GAAP. So what are the limitations that will present the true and fair view of what the financial statement, okay, that would prevent what the true and fair view of what financial statement. And mind you, when financial statement does not show true and fair view, there is what? There is materiality error. There is what? Cost and benefit what? Deficiency. And what? There is qualitative characteristics. Okay, balance between qualitative characteristics. Therefore, we are saying that there is what? There is constraint, which will undermine, okay, undermine or prevent the decision making and what? Accountability of what? The users. Okay, so the constraint is very, very important. So what are the constraints that prevent the users to ask for discharge of what? Accountability and decision making purposes? One, we are saying that materiality. We are saying that information is material if its omission or misstatement could influence the discharge of accountability by the entity or the decisions that users make on the basis of the information that are provided in the general purpose financial report. So in so doing, we are saying that in developing what the IPSAS and what recommended practice guide, and mind you, I exposed you to what? To the role and authority of what? The financial statement. And I said that the authority of the financial statement, we are saying that the IPSAS board just apply the conceptual framework in developing what the IPSAS and the recommended practice guide. So here, have you seen that it has come here? Okay, have you seen that it has come here? Okay, it has come here. So we are saying that in developing what the IPSAS, in developing the IPSAS and the recommended practice guide, the IPSAS board will consider the materiality of the consequences of the application of a particular accounting policies, the basis of the preparation or the disclosure of a particular item or information. So this is the materiality is what is a constraint on information included in the general purpose financial report. And thus entities consider the materiality of the information in making what decision and on what disclosures. So what this simply means is that we are saying that information, okay, information is what is material when there is what its omission, or when there is what omission, or what material misstatement, and that will what influence what discharge of accountability and what and decision-making purposes. Okay, so if there is what material misstatement, or there is what an omission in the financial what statement, therefore it will influence it greatly when it is what is big. Okay, so depend on the size of what the material error. Okay, so that is why we are saying that qualitative of the general purpose financial reporting, it should be what faithful, what represented. It should be what faithful represented. So we are saying that the materiality is what when information is what material, and its omission or misstatement will influence or could greatly influence the discharge of the accountability and what decision making. Therefore, we are saying that the information is what is material. Please, is it okay?
Yes, please.
So when you prepare the financial statement and there is what an error or omission, that this omission will undermine what the decision making of what the financial statement and what the accountability, discharge of accountability. Therefore, we are saying that the information is what is material. Cost and benefit. Cost and benefit. We are saying that the financial report involves what cost.
Can I ask a question?
Okay.
Okay, so I want to know that can there be a point where an information is immaterial from the perspective of the discharge of accountability, but very material on the point of decision making?
I'm not getting your question.
Myself.
I'm not getting your question.
My question is, the two keywords here is discharge of accountability and decision making.
Yeah.
All right. So for me, let me use Ken Ofori-Atta as a point in case.
Okay.
So yes, he's presenting maybe a financial statement to us or a budget to us. Then they realize that this information is very immaterial. In other words, it's very insignificant. All right, the discharge of his role as a finance minister. But from my perspective, as a user of that information, I think that it is very important that that information is included in the financial statement. So from my perspective, I am considering it as a very significant information, and for that matter, it is material. Do you get a point I'm saying?
Yes.
That from the point of the person discharging his role, who is responsible to account, that information is immaterial. So its omission or misstatement does not necessarily influence the financial statement towards the with respect to the decision maker. But if I receive this financial statement, I think that okay, fine, that information is supposed to be included because I think that it will inform my decision making. Can there be a case like that where it is immaterial from the point of accountability, but very material on the point of what? Decision making.
Okay, thank you so much. Let me pick it from here. Information is said to be what? Material. Okay. when the error or its omission will influence what decision making and accountability. You know, it goes hand in hand. Okay, it goes hand in hand. You can't get information that are what material error, and you can use it to discharge accountability, but you can't use it to make decision. Okay, it should go hand in hand. The information, let me use an example here. Okay, Kenoforiata is presenting what? The budget. Okay, or let me use auditors for example. Okay, when auditors is coming to audit your account, they set a materiality. For instance, the overall amount that you do take, okay, is maybe 10,000. Okay, 10,000 Ghana cedis. The auditor will set a materiality that when I get an omission or material misstatement, that you have misstated maybe 20 cedis in your account. This account, when you are presenting your financial, it will not have any great influence on on the financials. But when the error, the material error that I have set to my side is above 20 cedis. Okay, above 20 cedis. Therefore, I am saying that above these 20 cedis, the information that you are presented will overlook. There won't be any accountability on decision making, because it will affect us. Are we clear? So if this information that you are presenting, the material error that I have estimated is 20 and below. So with this, I would assume that it won't much affect it, or it won't much affect the preparation of the financial report. So therefore, I'll move on and tell you that you should go and do the payment. Please, are we clear? But when it is above these 20 cedis, therefore, I will ask you to go and present it. Okay, you should go and present it. So therefore, it will affect the discharge of accountability and decision making. I don't know if this is how you want it, or there is per my understanding of the question. I don't know if it is okay for you.
Okay, I think I'm okay. I'm okay.
I
think I'm okay.
So
we can make progress.
It depends on the materiality. Okay, it depends on the materiality. So the materiality, if it is high, and it will influence the discharge or inform decision making and accountability. Therefore, we are going to say that the financial statement is material. But if it will not influence the discharge of accountability and inform decision making, therefore we are saying that the information is immaterial. So therefore we can move on with it. So if Kenoforiata has omitted maybe 20 cedis in his budget, so these 20 cedis, we are saying that it is insignificant. So therefore, it will not influence greatly on the financial. But if the budget that he has presented, there is material misstatement of above 20 cedis of this 10,000. Therefore, we are saying that yes, it is going to influence the discharge of accountability and decision making. So depending on on the range, or depending on the quantum, or depending on the significant value that has been omitted, that is what will influence the decision making and accountability. Please, is it okay?
Yeah, I'm okay.
Okay. The next one is cost and benefit.
That's fine by me.
Okay. Cost and benefit. We are saying that the financial report involves cost to both the preparer and the user. So the benefit of the financial reporting should justify the cost involved in producing that information. Thus, judgment of cost-benefit analysis is required. So what this simply means that preparing financial statements, it involves cost. So the cost that you are incurring to prepare the financial statement, are we going to get the benefit out of it, or its equivalent benefit out of it? If you are not going to get equivalent benefit, therefore we are saying that there is cost and benefit constrained. But if the cost we are inputting in preparing the financial statement, we are going to we are going to accrue an enough what benefit out of the cost. Therefore, we are saying that it is what the cost and benefit is what is being achieved. Please, are you okay? So that is why we are saying that the standard status,
Yes, please.
preparedness of the financial report considers the cost in relation to what, to the benefit. Let's compare the cost that we are inputting in preparing the financials and what, and compare it to the benefit we are going to accrue out of what, the financial statement that you are presenting. So, is the financial statement going to benefit the users as compared to the cost that you are using it to prepare? So, for instance, you are receiving a salary. Okay, you have been employed, and looking at your distance, okay, looking at your distance, you are being paid maybe 1,000 cedis a month. But before the month end, you spend maybe a fare of what, 700 cedis. So we are saying that the cost and benefit will not be achieved simply because the benefit you are going to get out of what, out of your salary, the cost will outweigh it. But if maybe you are receiving 1,000 and maybe your transportation and feeding could be maybe 400 cedis, you could realize that you are going to get benefit out of it. So therefore, the cost and benefit is going to be achieved. So when you relate this one to the financial statement, when Ken Oforiatta is presenting what the financial statement, he's going to prepare using what, cost. So the cost he is inputting in preparing the financial statement, he is going to ask himself, would the citizens also benefit from this financial statement that I'm preparing? So if yes, then what, the cost and benefit is what is achieved. But if no, that means there is what, a constraint that is included in the general purpose what, financial report. Please, is it okay?
Yes, sir.
Okay. Thank you. So the next one is please
sir,
come. Yeah.
So when it comes to cost benefit, it should purely be looked at the preparation of the financial statement.
Yes, please. Yes.
Okay.
Please.
Because of the example you gave, like you are receiving a salary, you are being paid and you are receiving a salary. Although maybe, as you mentioned, out of the 1,000, 700 is going to transportation. But then I was trying to look at maybe the experience that you might get that could actually prepare you to get, an advanced job that can let you get more than 1,000. So I'm looking at it in terms of experience.
Okay, thank you so much. So
okay,
with the constraint that is included, we are limiting ourselves to the cost that you use to put the financial statement. Okay. So the cost that you are incurring in order to get to your destination, that is your workplace, after end all, you are going to prepare your financial statement. Will the cost be what? Will be beneficial to what? To what you are going to do or the salary that you are receiving. Okay. So that is why I gave that example in relation to the financial statement. Okay. So the financial statement that you're preparing, it is what is cost inclusive. So the cost that you are included in what? In the preparation of the financial statement, is it going to what? To give an outright what benefit to the users in order to make decision on the information that is included in the general purpose financial report. Please, is it okay? So here, when you're doing your explanation, kindly limit yourself to what? To the cost. Okay, the cost that you incurred in the preparation of the general purpose financial report. Okay, so the cost can be what? Providing information, that is what? Cost of collecting and processing what? The information. The cost of verifying it, and what? And presenting the assumptions and methodologies that support what? It. And the cost of what? Disseminating. Okay, the cost of what? Disseminating. So the cost that you are like you use to what? To disseminate the information. Okay, will it be useful comparing to the what's the name? The benefit accrued out of what? The general purpose financial report. The last one is what? Balance between the qualitative characteristics. Balance between the qualitative characteristics. The balance between the qualitative characteristics. Colleagues, can you hear me? Colleagues, can you hear me?
Yeah, we can hear you now.
Okay, MTN people took their network, but it came back briefly. They took their network, but it came back briefly. Okay, so the balance between the qualitative characteristics, we are saying that the qualitative characteristics work together to contribute to the usefulness of the information. So what are the qualitative characteristics? Those are the ones that we have looked at: the relevance, the faithful representation, understandability, timeliness, comparability, and verifiability. So we are saying that the qualitative characteristics work together. So all these things that we have just mentioned, they work together to contribute to the useful of what? The information. So for example, faithful representing an irrelevant information in the general purpose financial report does not achieve usefulness of what? The information. Thus, in some instances, balancing or trade-off between what qualitative characteristics may be what necessary to achieve the objective of the financial reporting. So here, in the simple terms that I want you to understand is that some of the qualitative characteristics fight among themselves. Okay, they fight among themselves. So when it happens so, then we are saying that what? There is information constraint. Simply because let's use financial faithful representation and what? And timeliness. Okay, faithful representation and what? And timeliness. We are saying that for financial information to what? Should be useful. It should what? It should be free from what? Material error. It should be complete. It should be neutral. But timeliness also is fighting this. Okay, timeliness is fighting this. The PFM Act is saying that within first quarter, you need to present financial statements to the auditor to audit it. But here lies the case. You are also looking at what? It should be what? Neutral, material, free from material error. So when you are able to achieve one and you are not able to achieve the other one, so therefore the information we are providing will be what? Will be irrelevant to the users for what? For their decision making and accountability. So when the two of them fight, or two or more qualitative characteristics fight among themselves, you are seeing that what? There is what? Constraint on the information included in what? In the general purpose financial report. I will set an example again on the relevance, okay? On the relevance and what? And the faithful representation, okay? Relevance and what? Faithful representation. Here, we are saying that the information should what? Should be what? Confirmatory, and should have what? A confirmatory value and predictive value. Here lies the case. We also want the information should what? Should be free from material error. So if the information that you are presenting does not meet the faithful representation, therefore the figures on the face of the financial cannot be what? Cannot be confirmed and cannot be what? Predicted. So therefore, we are saying that when such instances happened, therefore we are going to have what? A constraint on the information that are included in the general purpose financial reporting. So in the simple terms, or in conclusion, on the balance between the qualitative characteristics, we are saying that when what? The financial the qualitative characteristics of what? The financial statement fight among themselves, which will provide what? Irrelevant information in the general purpose financial reporting that does not what? Achieve the usefulness of what? The information. Please, is it okay, or I should go over? Colleagues, is it okay, or I should go over?
Please, can you go over?
Okay.
Please go over on my side.
Okay. Balance between the qualitative characteristics. Okay. We are saying that the qualitative characteristics, they work together. And when they work together, they contribute to what? A very useful of what? The information that are included in the general purpose financial report. So I set an example. I made a simple explanation that when we say balance between the qualitative characteristics, when two or more of the qualitative characteristics fight among themselves. So for instance, we said we want information that should be what? Faithfully represented. At the same time, we want the financial statement should be presented on time. Okay, so as we are in a hurry to present the information on time, we have realized that there is what? There is material misstatement, or there is what? Material error in the financials after what? Presenting. So when it happens, therefore, the information that we are provided will be irrelevant because one of the sided is not achieved. And I gave another example of what? The relevance and faithful representation. We are saying that the information that we are providing should what? Should be relevant and what? Faithful represented. And faithful representation means that there should be what? Free from material errors. But when we are presenting the financial statement, we realize that meeting the time, there is what? Information error on the face of the financial. So therefore, when we go into the phase of what? The relevancy, we won't be able to what? To confirm the values, and we won't be able to what? To predict as to whether the the financial statement is what? Is good or not. So when the two or more financial qualitative characteristics fight among themselves, therefore we are saying that financial statement is what? There is what? A constraint on it. Okay. So let me cite an example. You are an accountant. Okay, you are the accountant, and your MD has asked you to present what? Financial statement within 2 days. Okay, within 2 days. So these 2 days, he has given you the deadline. You are in a hurry to present the financial statement to what? To the MD. But after presenting it to the MD and publish, we realize that there is what? Material error. Okay, so if there is what? Material errors, that could greatly influence the discharge of what? Accountability. Therefore, we are saying that there is what? A constraint. Okay, there is a constraint. So here, we are able to what? To achieve what? The timeliness. We are able to provide the information to the MD on time, which is what? Before the deadline. But when we presented it, there is what? Material errors. So if there is material errors, therefore, there is going to what? A constraint on what? The faithful representation. It gives what? A limitation on the side of what? The faithful representation, as well as the relevance, because the figures on it, once there is what? Material error or material misstatement, the figures on it cannot be what? Cannot be confirmed, and we can't also predict it to the future as to whether there is what? A going concern or not. And in so doing, comparing it to two sets of phenomena, that is the comparability, will be very difficult because the last year financial statement that you are presenting will be different from what? From this year financial statement because of what? The inability to confirm or predict the figures on the face of what? The financial. So therefore, it makes it what? A constraint that will be included in the general purpose financial report. Please, is it okay?
Yes, please.
Colleagues, is it okay?
Yes, please. On my side.
Or I should go over again?
Oh, it's okay.
It's okay.
Please get it once and for all. So when you are explaining this one, please use the qualitative characteristics to explain it. Okay, that is why they are saying that in some instances, balancing trading off between what? Qualitative characteristics may be necessary to achieve the objective of what? The financial reporting. So let's be mindful when we are explaining this particular point. Okay, thank you.
Okay.
The next aspect you are going to look at is what? The reporting entity. A reporting entity. A reporting entity. What is a reporting entity? A public sector reporting entity is a government or other public sector organization, program, or identifiable area of activity that prepares general purpose financial report. So in simple terms, it is what? Public sector entity, reporting entity is what? Is government or other public sector organization that prepares general purpose financial report. Okay, so any public sector entities that prepares the general purpose financial report, we term that particular entity as what? A reporting entity. And mind you, I gave you two types of what? Financial report. I said we have what? The general purpose financial report and what? And special purpose financial report. So any institution under the public sector that prepares the general purpose financial report refer that particular entity as what? A reporting entity. Please, is it clear?
Okay.
So a public
Yes,
sector
please.
may comprise two or more. A public sector may comprise of two or more separate entities that present general purpose financial report as if they are a single entity. And in so doing, such entity are referred to as group reporting entity. So when two or more public sector entity comes together to present what? A financial statement in a single word, as a single entity. So therefore, we say that those what reporting entity are what? A group reporting entity. Okay, we have characteristics of a reporting entity. What makes up a reporting entity? What do we see to say that this particular entity is what? Is a reporting entity under the public sector? One, when it is what? An entity that raises resources from or on behalf of a constituent and uses the resources to undertake activities for the benefit of or on behalf of what? Of those constituents. Okay, so when they what? We have an entity that raises resources. So when you talk about raises resources, that means that they take what? Monies from the citizens. Okay, they take monies from what? The primary users. Okay, so when they take monies from the primary users and uses what? That monies or resources on behalf of what? The constituents to undertake what? Activities that will benefit the entire what? Constituents, then we are saying that that such entity is what? Is a reporting entity. Okay, then again, when there are what? Service recipients or resource providers that depend on the general purpose financial report of what? The entity for information, for their information needs, for accountability or decision-making purposes. Okay, so when what? There is service recipient, the monies that they are taking from what? Or the resources they are taking from the constituent or the citizens, okay, the services they are providing through the use of what? The resources. Those that receive what? The resources, okay, they are what? The service recipients, okay. So if the monies that they use, they take from the citizens or the primary users, okay, they uses those monies or resources to undertake activities. And there are people that receive those activities or programs, okay? There are people that receive these services or programs that are delivered by this entity. Therefore, we are saying that there is what? A reporting entity. So it is only two. When they raise resources and where they have what? Service recipients and what? Resource providers. So these are the only two characteristics of what? A reporting entity. We move on to the element in the financial statement. The element in the financial statement. The element in the financial statement. Here, I will entreat you to take your books and pen again. Okay, I have not explained it in the slides. So I'm explaining to you now so that you write it. Okay, you write them for your own information. Okay, for your own information. Elements in the financial statement are the building block from which financial statements are prepared. These building blocks provide an initial point for recording, classifying, and aggregating economic data and activity in a way that prepares users with such information that meet the objective of financial reporting and activities of what? The qualitative characteristics of financial reporting, while taking account into the constraint on the information that is what? Included in the general purpose financial statement. So here, I want to pause and ask you, what are the constraints that are included in the general purpose financial reporting? I want to pause here and ask, what are the constraints that are included in the general purpose financial reporting? Colleagues? Colleagues, are we there?
Yes, please.
So what are the constraints? Let's make it quick. What are the constraints?
We talk about the materiality, cost, benefits, and then the balancing between the qualitative characteristics.
Okay, thank you. Okay, thank you. So when we are looking at the elements on the face of the financial statement, We are taking into account what the constraint on what information that is included in the general purpose financial report. Okay, so let's take note. Okay, let's take note. So, you know, I want to begin by saying that the element on the face of the statement of financial position, the financials, you already know 4. Okay, you know 4. And now, the 4 that you know, fine, take it, put it in your pocket so that you won't forget it. But here, the public sector is saying that we should add additional 2. So those additional 2 is what you should know now. Okay, those additional 2 is what I said you should what? You should know now. Please, are we clear? Please, are we clear? So in all, the 4 that you already know, we are adding 2 to it, making it 6. So at your level, we are saying that the elements on the face of the statement of the financials are 6. 1, we have the asset and liability, the asset. Then 2, we have what? The liabilities. 3, we have revenue. 4, we have expenses. 5, we have ownership contribution. And the last one is what? Ownership distribution. Please and please and please, colleagues, are we there? Let's not forget this.
Yes, please.
Let's not forget it. We already know 4. So let's add the 2 to it, making it 6. Are we clear? So if I ask you,
Yes.
what is an asset? What is an asset? How would you define asset? So asset, who can define an asset for us? Asset. What is an asset? Okay, so let's move. When you talk about an asset, okay, we are saying that an asset are resources that are controlled, okay, that are controlled by the entity as a result of past events, of which economic benefit will flow through to the organization. Economic benefit will flow through to what? The organization. Or asset, okay, asset. Please, are we writing?
Yes, please.
So should I start again or I should go over?
Okay, please, you can start again.
Okay. So the question I asked is only one. Should I start again or I should go over?
Please go over.
Yes. I will start again and I'll go over again. So the element, the first one is an asset. What is an asset? Asset is what? It's a resources that the entity controls. That the entity controls as a result of past events. As a result of past events. As a result of past events. And ownership and ownership is confirmed to them, to which is expected to provide benefit to the entity, or economic benefit will flow through to the entity. So I take it again. An asset is a resources that the entity controls as a result of past events, of which economic benefit or service potential is expected to flow through to the organization. Please, is it clear? Is it clear?
Yes, please.
Thank you.
Yes, please.
Should I go over or it's okay?
So it's clear.
Okay. So, what is a liability? What is a liability? Liability. We are saying that a liability is a present obligation. It's a present obligation that arises as a result of past events. 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 That's an outflow. That's an outflow of resources. That's an outflow of resources. Will be used in settlement of it. Will be used in settlement of it. Will be used in settlement of it. When you talk about an outflow, that means resources is going out. So when you have what obligation that you use money to settle it, therefore we are saying that is what is a liability. Then we move on to what? To the revenue. What is a revenue? What is a revenue? What is a revenue? We are saying that a revenue is an increase in net financial position. It's an increase in net financial position of an organization other than ownership contribution. It's an increase in the net financial position of an organization other than ownership contribution. Should I go over or it's okay? Revenue.
Please go over.
Revenue. Revenue is what? An increase in net financial position or net financial asset. It's an increase in net financial position or net financial asset of an organization other than ownership contribution. Other than ownership contribution. When we get to ownership contribution, you understand this better. Okay. Then expenses. 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 Expenses is a decrease in net financial position. Expenses is a decrease in net financial position of an organization other than ownership distribution. Other than ownership distribution. I take it again. Expenses is a decrease in net financial position or net financial asset of an organization other than decrease in ownership contribution. Other than decrease in ownership distribution. Other than decrease in ownership distribution. Please, is it clear or I should go over? So these are the 4 elements that you know right from your SHS level to the university. But in your professional way, we are saying that you should know additional 2, which is what? Ownership contribution. So what is ownership contribution? What is ownership contribution? Ownership contribution. Are you ready?
Yes, please.
Ownership contributions are inflow of resources. Ownership contributions are inflow of resources to an entity. They are inflow of resources to an entity that are contributed by external parties, by an external parties in their capacity as owners, which establish or increase an interest in the net financial position of the entity, which establish or increase an interest in the net financial position of the entity. So ownership contribution are inflows of resources to the entity that are contributed by the external parties in their capacities as owners, which establish or increase an interest in the net financial position of the entity. Please, is it clear? So when you talk about the ownership contribution, they are the monies that the stakeholders contribute towards what? The organization. Okay? They are monies that what the stakeholders or the shareholders contribute to what? To the organization. Please, are we clear?
Yes, please.
Okay. So the ownership distribution, you are saying that ownership distribution are outflows. They are outflows of resources. They are outflow of resources from the entity that are distributed to the external parties that are distributed to what? To the external parties in their capacity as what? Owners. In their capacity as owners, which return or reduce an interest in the net financial position of the entity. So the ownership distribution are the outflow of resources from the entity that are distributed to the external parties in their capacity as what? Owners, which return or reduce an interest in the net financial position of the organization or the entity. So example of ownership distribution is what? Is the dividends that are paid what? To the owners. Okay, the dividends that are paid what? To the owners. Okay, so this is in short what I want you to know: the assets, the liability, the revenue, expenses, ownership contribution, and ownership what? Distribution. So with this, when we say that revenue is an increase in net financial position of an organization other than ownership contribution, we are saying that they are the money or the tax-paying money. Okay, they are the tax-paying monies. Okay, they are the tax-paying money other than the money that has been always been contributed by what? By the owners. Please, are we clear? So we move on from what? From this to what? To the recognition criteria. What are the recognition criteria?
Sir.
Yes.
Sir, please, I have a question.
Okay.
Under the ownership distribution.
Okay.
Apart from dividend that is actually paid or proposed and paid to the owners, do you have any other examples that can fall under ownership distribution?
I don't want to give you examples. Okay.
Okay.
In the public sector, when you are writing, don't give examples. Okay. I just brought that one. I don't know how to put it, but the issue is when you are explaining, I just brought the dividend just to enlighten your understanding. But when you are explaining this, please don't bring examples.
Okay.
Okay. So please let's leave the example somewhere. I just brought it just to enlighten your understanding. Okay.
Okay.
Thank you. Okay. So let's move on. Let's look at the nature and purpose of assets in the public sector before we look at the recognition criteria. Okay, the nature and purpose of assets in the public sector. What do we use the public asset for? What are the purpose for holding public assets in the public sector? This is the question I want to ask you. And this is what we are going to use to explain. So we are saying, one, in the public sector, the primary objective for holding property, plant and equipment, and other assets is for their service potential rather than the ability to generate cash flows. So one, the nature and purpose of public assets in the public sector is that in the public sector, the primary objective for holding property, plant and equipment, and other assets is for their service potential rather than their ability to generate cash flows. So mind you, in the public sector, we are not using we are not holding an asset to generate cash to the entity, but we hold the asset in the public sector to generate for their what? Service potential, not for what? Cash generations. And because of the types of service that are provided, a significant proportion of the assets that are used by the public sector entities is specialized. For example, the roads and the military assets. There may be a limited market for such assets, and even they may need considerable adaptation in order to be used by other operators. These factors have what? Implications for the measurement of such assets. So, in the private sector, we have purpose for what? For holding public asset, the assets. And when we come to the public sector, we have what? Different purpose for what? For holding it. And as I said, the primary objective is for what? For holding property, plant, and equipment. Another asset is for what? For their service delivery or the service what? Potential, other than what? The ability to generate cash. Okay. Then 2, government and other public sector entities may hold items that contribute to the historical and cultural character of a nation or region. For example, act treasures, historical buildings, and other artifacts. So they may what? Also be responsible for the national parks and other areas of natural significance with native flora. Okay, such items and areas are not generally held for sale, even if market exists. Rather, government and public sector entities have a responsibility to preserve and maintain them for current and future generations. So what this simply means is that in the public sector, we hold public assets for historical and cultural character of what? A nation. Okay, so here I'll use Kwame Nkrumah as example. Okay, Kwame Nkrumah as example. You know, they say we have Kwame Nkrumah Sanders. Everybody wants to go and look at Kwame Nkrumah Sanders. Okay, when you go, you pay money before you look at Kwame Nkrumah Sanders. But today, if there is what market that exists to sell Kwame Nkrumah Sanders, you realize that the amount that we use to sell it will be minimal as compared to what? The historical events that surround it. Okay, when people are going to look at it, look at the money that it generates to the public as compared to to selling that particular standard. Okay, so when you bring it to our today terms, you realize that selling that standards will be very minimal. Okay, even though if market exists. Okay, but when we hold it for what? Historical and cultural what? Character, you are going to what? Get money more out of what? That particular standard that what we preserved. And mind you, let's also use what? A case of, what's the name? Cape Coast Castle. Okay, Cape Coast Castle. If they are to value Cape Coast Castle and sell it today, you realize that the amount they are going to get from that money and from that building will be minimal as compared to holding it for historical purposes. Okay, look at people that goes there to look at that particular castle. Okay, so if today we say we are going to sell it, you realize that we are going to lose a lot. So we are holding that such castle. We are holding such castle for for culture character, so that it will generate revenue for the government. Please, is it okay?
Yes, please.
So these are the two that you need to remember: the nature and purpose of public access and public in the public sector. So 1, in the public sector, the primary objective for holding the property, plant, and equipment. Another asset is for their service potential or service delivery, rather than the ability to generate cash. And government and other public sector entities may hold items that contribute to the historical and cultural character of a nation or region. For example, act treasures, historical buildings, and other artifacts. Okay, so we look at the last thing so that we close for the day. We look at the last thing so that we close for the day. The recognition criteria in the financial statement. The recognition criteria in the financial statement. When you talk about recognition, what is recognition? We are saying that it's the process of incorporating and including in amount that is displayed on the face of the appropriate financial statement, an item that meets the definition of an element and can be measured in a way that qualitative characteristics and takes account of the constraints on information that are included in the general purpose financial report. So please, you see that here the qualitative characteristics and the constraints are always moving, because the qualitative characteristics are the things that makes the financial statement very useful for decision making and accountability. Okay, so such cases, you realize that when we were looking at the other part, we saw the qualitative and qualitative characteristics, and yet we are again seeing it. So that it tells you the importance of such qualitative characteristics, okay, and the constraints. So let's don't forget it. Let's don't forget it. Relevance, faithful representation, understandability, timeliness, comparability, and verifiability. Let's not forget. And the constraint, materiality, cost-benefit analysis, and balance between the qualitative characteristics, okay? So the recognition criteria, what are the recognition criteria for an asset, okay? We are saying that an item certifies what? When there is what? An item that certifies the definition of an element, then we are saying that it meets what? The definition criteria, okay? Then two, when it is probable that future economic benefit or service potential that are associated with the asset will flow to the entity. And the last one is when it can be measured reliably in a way that achieves the qualitative characteristics and takes account of constraint on information included in the general purpose financial report. Okay, so these are the three recognition criteria. I said one, when an item certifies the definition of an element. So when you are defining an asset, okay, when you are defining an asset or you are defining what? A liability, and the item what certifies such definition, then we are saying that yes, we need to recognize it on the face of what? The financial. And mind you, we said that when asset can be what? Asset is what? Is a resources that can be controlled, okay? That can be controlled as a result of past events, of which economic benefit will flow through to the organization. So when the definition of what? An asset that you are intended to recognize certifies or meets the definition what? Of such element, therefore you need to what? Recognize such element on the face of what? The financial. Two, when it is probable that the future economic benefit or service potential that are associated with the asset will flow to the organization or the entity. So here, when you realize that there will be future economic benefit that you get out of what? That particular asset, or where there is what? There is going to be what? Service potential in terms of what? Service delivery that will be associated with such item, and it will flow to such organization. Therefore, we are saying that that asset or that item should be recognized on the face of what? The financials. Then the last one is that when it can be what? Measured reliably. When it can be measured reliably in a way that achieves the qualitative characteristics and takes into account of what? The constraint on information in the general purpose financial report. What this simply means is that when all the above that we have said, the cost of it can be what? Can be measured reliably. The cost that you use to incur in such what? Item, or incur in bringing such item, or incur for what? For the liability can be measured reliably in a way that the qualitative characteristics that we have just mentioned above, that is the relevance, the faithful representation, the understandability, timeliness, comparability, and verifiability will be met, okay, when it meets what? The definition, okay, and it can be measured reliably and takes into account the constraint. What are the constraints? That is the materiality, the cost and benefit analysis, and the last one, which is what? The balance between the qualitative characteristics. When you blend all these things and you realize that these costs can be what? Measured reliably, therefore the items that we are bringing on board can be what? Can be recognized on the face of what? The financials. Please, on this point, at this point, any questions? At this point, any questions?
So please, no point. Sorry.
Should I go
No
over
question
this
on my
one?
side.
Should I go over this one? This is what we are going to use to answer the footnote when you are preparing the 20 marks, the 20 marks full question. Okay, the additional information, this is what you are going to use. So please understand it. Okay, understand it. Understand what I've just said. I'm begging you, please and please understand it, so that when we get there and we are doing the calculation and we are recognizing items and we are not recognizing items, you will be able to know the reason why we are doing so. Okay? So please and please just assimilate this, understand it, get the understanding today, so that going forward, we are all going to be on the same platform. So please, I ask again, on this note, do you understand the recognition criteria?
Yeah, please, I do.
Okay. Other colleagues, do we understand?
Yes, sir.
Okay.
I do.
Franca, Madam Franca, do you understand?
Yes.
Thank you. So on this note, we'll close here, then we continue next week. Okay, we'll close here, then we'll continue next week. Okay, please, any questions so far?
Just want to I just want to request that the how to study next week, probably if you can drop it on the on the platform for us, so that maybe we let's say glance through before we join the class or help.
Okay, well noted. Well noted.
Yes, I also subscribe to that assertion too, to that request.
Well noted, my brothers, well noted. I'll do exactly that on the platform. Let's engage the platform. Okay?
Okay. Okay.
Next week, we'll continue with the conceptual framework and complete it. What we are going to look at next week is what? Is the measurement, okay? That is the measurement. Sorry. Please, a minute. Measurement basis of what? The measurement basis of what? An asset and liability. Okay, and the objectives. The objective of what? The measurement. Those are what we are going to look at next week. And if possible, we'll add what? PIFA. If possible, we'll add PIFA. If possible, we'll add PIFA to it. Okay.
Okay.
So next week, this is what we are going to do. All things being equal.